I think it's important to note that technology's not doing worse.
Yeah,
It's
it's
just
not
not doing it.
falling
It's just not
below.
doing as good.
Yeah.
Like the BP for technology, BPEC Tech, just moved to its highest level since February of 23,
Yeah.
like
So really, it's just like
yesterday.
if you're comparing it to race cars, XLC is just a little bit faster. It's not like they're both doing poorly. I mean, either's doing
Yeah,
poorly.
comparing it to race cars, it's good. Yeah,
Just a little bit faster.
just a little bit faster. That's all you need for a quarter mile, right?
Mm-hmm. Just live it 1/4 mile at a time.
That's all XLC's doing. Living 1/4 mile at a time. Hello, everybody, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on December 6th. I'm Ian and joined back by David this week.
Pleasure to always be on and back in the office for sure.
Yeah, it's good to have you here. We had our I'd like to think that you came back up into the office just because you like being here. We did have our holiday party last night,
I
so that's
mean, yeah, there was
probably
added motivation.
probably more of a reason there.
There's added motivation
Was a
for
good
sure.
time. Yes, definitely. Way too much food. Still feeling that today. That's for sure.
Amazed by the idea of that specialty pork chop, but I think we could probably have an entire podcast about that particular pork chop.
Yeah, we don't need to. We don't need to. Please don't bring up the reminders of the pork chop. Going into broader market movement, though, I mean, we've seen continues to be good. I mean, I feel like a parrot just kind of repeating myself on the podcast these
Mhm.
days because we're coming in yet more all-time highs for the S&P. But we've seen some developments underneath the hood that I think are pretty interesting to note with just more participation, right? I mean, maybe if we can kind of kick off there and then we'll dive into some other areas that are showing more specific improvement. But when you look at like the percent positive trend for the NYSE, PT NYSE, it's measuring the percentage of stocks in the New York Stock Exchange that are in a positive trend on their default charts, right?
Mhm.
Just hit new multi-year highs, up at 62%. 62% of stocks, roughly like 2,000-ish names, I think it is.
Yep.
We're trading a positive trend. It's a good thing for stocks.
Yeah, by no means suggesting at any point that there's a weakness in this majority of stocks. I mean, at this point,
Right.
that 62% coupled with the BP for NYSE sitting at 64%, which stubbornly has been in place since late 2021 for that particular indicator. But I mean, even then, sitting at 64% is nothing to scoff at. You know, you're
Right.
still looking at healthy participation levels. And in truth, I guess you're looking at the highest participation levels, relatively speaking,
And
that
this
we've
is
seen over two
and
years.
this is
So,
long-term participation too.
right.
It's not
Yeah.
like a near-term breadth thrust. I mean, you look at this indicator. I mean, it fell down to was that 24% in September of 2022. And so
Hmm.
when you're looking at other historical bear market environments, you've seen this indicator get much lower than that in other instances. Like 2008, it got all the way down to 6%, right?
Right.
Even in 2020, got down to 8%. I mean,
Hmm.
moving down to 24% is not great. When you bounce out of other bear market environments, though, so like your 2009, by 2011, this indicator was up at 82%. And 2021, February 21, this got up to 78%. So 62%, while it's higher than we've been, it's pretty healthy ascent that we've seen recently.
Well, and it's not like it's, as you said, it's not been just built on this idea of breadth thrusts
Right.
occurring. Like it's been far more steady as you go, if you will, I guess is the better phrase.
Right.
So that's helpful in many ways, especially for feeling like we're not trying to play catch up.
It's consistent, right? I mean,
Right.
when we get back to back 20% years in the S&P, everyone's like, how much longer can it go? Are we going to
Mhm.
things going to start to turn around? Like you look at some of these technicals underneath the hood and I mean, it's consistent improvement. And that's kind of what we need. We got multiple consecutive years. What is it? In the 90s of 10, 20% gains in the
Mhm.
S&P in consecutive years. I mean, not saying that, not calling here that we're going to get another 20% gain in 2025, but it's
Right.
not
Yeah.
outside the realm of possibility,
No, by
right?
no means. I mean, especially with sort of even have we seen leadership changes under the hood within domestic equities over the past 2 years, especially here recently?
Yeah.
Yeah, but it's not like that's been anything but a brief hurdle at times to just then sort of reload and go again.
And rotation is a good thing, right? I
Yeah.
mean, you definitely can be. And we saw that, to your point, over the past week in looking at some of our indicators. One of the broader indicators that we look at, we call it DALI, dynamic asset level investing, looks at a relative strength comparison of broad asset classes and then also sectors. And it's historically been a pretty good kind of time here of sectors, especially over the past few years. We've seen weakness from technology, started to drop in late summer, I think, falling from the first spot down into the third spot. And then this week we saw it really, I don't want to say technology fell to fourth. Really, you saw communication services jump into third. Is kind of what happened,
Yeah.
right?
Well, it was the initial conversation we were having about this earlier. My first thought is thinking about racing, and it's not that technology is sitting in last place
It's not
right
going in
now,
reverse, right?
right? I mean, you would still qualify it obviously as a top five car.
Yeah.
You just have this situation where communication services has had a good run, and it's just slightly faster. I
Right.
mean, and I think in a lot of ways, what's interesting is we were even surprised to look under the hood of some of the communication services names because we obviously automatically make certain assumptions when we think of communication services. But even then, this morning, I was thinking about, before getting into those individual ideas, I was thinking about the fact that this is the first time since 2016 we've seen comm services above technology and just how different
And
the
back then
sector
it wasn't
telecom.
right,
Yeah.
right, yeah. It
It
wasn't
was, and that's just how different the sector looks now compared to 8 years ago.
right. I mean, you have 38% of XLC, the broader cap weighted communication services ETF. 38% of that ETF is in two companies with Meta and Alphabet. Now, the Alphabet exposure is split into two holdings, obviously, with the A shares and C shares. But when you're looking at that, I mean, my assumption when I first saw communication services jumped into third place, I'm like, it's because of two stocks. Not the case. There's a lot of other stuff that looks pretty good underneath it.
Well, and I mean, we're talking about Meta and Facebook, or Facebook, Meta, and Alphabet as being sort of the primary ones. And I mean,
And Meta's had a good run.
and it has. And others that often get mentioned in this realm are Netflix, as well
Sure.
as T-Mobile, which has been sort of more of the stalwart within that more traditional communication space. But as we talked about too, there's even some of those gaming stocks that are under the hood that have had pretty good rallies here recently, and just some other names that you wouldn't necessarily right off the bat assume that's comm services name.
Like Live Nation was one that I was looking at. I was trying to pull up the ticker LYV. I mean, you look at performance of Meta, EA Sports, and Live Nation over the past 30 days. Live Nation has almost doubled the performance of Meta. It's up 16% over the past 30 days. I mean, Meta's done pretty well, especially over the past week. But EA Sports has basically matched Meta. They're both up 9.5% over the past month. I wouldn't have guessed that.
No.
If you just pulled me on the street before jumping in and kind of taking a look at some of this stuff.
Question is, do we have Taylor Swift Eras Tour to thank for Live Nation's boost?
Yeah, I mean,
only one can imagine. Right?
Yeah, she has her own GDP following her around, but it's that certainly is helping the stock price a little bit. But there's been a big pop in a lot of those names. It's not just Meta, not just Alphabet. Even in looking at, I think it's an interesting look. If you go in and you look at RSPC, the equal weight communication services ETF, look at its weightings there. I mean, you see Live Nation is the top weighting of any, even though it's equal weight, obviously it's going to have some rebalance parameters. Meta is the fifth largest weighting within there, which kind of surprised me to see. I mean, Disney's doing pretty well in their two, EA Sports, like you said. So there's just some other stuff to definitely take a look at. And when we're thinking about that equal weight, one thing that we were taking a look at was the equal weighted representative. If you stack up XLC against RSPC on a relative strength chart, which is cap weighted communication services against the equal weight, look at that chart on a 2% scale. It reversed down into a column of those in September. So what that means is we're seeing near term outperformance from the equal weighted since September. So this isn't a new thing too, right? I mean, it's been in the works for a little bit. We've seen the improvement, and so it's I think at the end of the day, that's healthy. It's a good thing for the sector, right?
Right. Well, and to your point of looking just at relative relationships with RSPC. We've seen that one with XLC change, but we're close to a potential market RS chart reversal for RSPC, which would be pretty notable. Um, just for not only its fun score, but overall, and the fact that thinking about equal weighted comms being able to outperform the market. I mean, again, it maybe harkens back to that idea of like what we initially thought was comm services. There's a little more to expand upon it, obviously, but it does make you sort of say, go, it's one of those things that makes you go, huh, really? That's
Yeah.
maybe not what I expected, but I'm happy to find it out.
Yeah. I mean, definitely happy to see that kind of it's just further confirmation, right? I mean,
Mhm.
that's what it would kind of point towards. Obviously, communication services is not the top ranked sector. We still see strength in financials, still doing very well. We still see strength in industrials in second. But it's just good to see other areas of the market showing improvement. I think it's interesting to note too. We talked a lot about comm services, but when we're looking at technology, right? It was like, I need to sell my technology exposure. It fell from third to fourth.
Not at all.
Technology is still showing more participation, right? I think that's an interesting thing to note. We saw the bullish percent for technology, BPEC Tech on our platforms, a percentage of technology stocks that are on a buy signal on their default charts. That moved to its highest level since February of 23 over the past 3 days. Which is so we're seeing further improvement, further participation from technology stocks. But to your earlier point, that car's just not going as fast as comm services, right? It's just not showing as much outperformance, but it's not weakening or not showing a lot of weakness, I guess, underneath of it.
So when you brought up the bullish percent for just broader technology, immediately what popped into my head is wonder what stock's on a buy signal or if it's on a buy signal right now. And surprisingly enough, Nvidia is actually on a sell signal.
Yeah,
So that obviously really kind of furthers your point of it's more than just the traditional names over the past 2 years that everybody has been looking at that are boosting that indicator, leading that indicator higher, which isn't a bad thing by
right.
any means. I mean, especially for not only for momentum strategies, but just in general for many strategies, more participation or broader participation is going to be a better situation,
Right.
in a better environment that at least you're seeing positive returns. And in some cases, it's a better environment for us to potentially lead to outperformance because we can deviate from indices and things like that. Whereas the past 2 years, it's been, or even maybe arguably longer than that, but stick with the index, follow the index, go wherever the market's going.
Yeah. I mean,
And
there's more stuff doing better. I mean,
yeah,
yeah, that's better certainly for our stuff and looking at trying to capitalize on momentum in different places in the market. If there's more places doing better, that's kind of better for momentum as a whole, typically. And in looking towards next year, when we're saying, okay, we're seeing strength in financials that happened at the last time President Trump was elected back in 2016 and 2017, saw a lot of improvement from banks, a lot of improvement from some of those areas. We're seeing that play out. I think a lot of people are kind of asking the question now, like, is that overblown? Could be one thing to kind of consider. But when we're looking at stuff like financials, yes, XLF is in overbought territory, but other stuff like communication services doing better is good for the broader space. It just because technology's fallen down, Nvidia's on the sell signal is not the end of the world when you have other stuff doing better, right?
well, and we're focusing on three primary sectors, but it's not like that things in industrials are cyclical. Those other two within the top five have been negative. I
Right.
mean, recently. It's again, they're just they're not quite they've not been as fast as the others,
Yeah.
if we're playing the race car analogy still. But it's still interesting to me just to see utilities kind of sitting there in the middle. But overall, it's still very offensive minded sector lineup right now. Um,
Yeah. And I mean, I think one of the other areas that at least we're keeping or I'm keeping a close eye on for 2025 is small caps, right? I mean, and so that when you're looking at like small cap technology, PSCT is the ticker for that from Invesco. We're still seeing that at relative highs from July of this year. So it's still showing improvement there, but we need the broader small cap space. If we're going to get further improvement. We really would like to see that further improvement from the broader domestic equity space. Would like to see small caps continue to show the consistency that it's shown this year. We were in a tight range with like IWM over the past
Hmm.
couple of years. But this year, since December of last year, it's been very kind of steady a cent
Steady,
higher,
steady as she goes.
which is good. It kind of honestly kind of looks similar to that bullish percent chart, right?
Well, and I think in some ways, especially for small caps, and going back to even talking about financials and even some of those stocks within the upper echelon right now, the, it's by no means negative if small caps within those sectors continue to rally or
Right.
continue to improve. Again, I mean, we're getting more potential options that we can select from investments that deviate from, just what everybody generally thinks of when they think of just the large cap names. So
Right.
at this point, I mean, I'm there with probably many that, financials look good and within the small cap space, and we've seen some of those other areas improve, but golly, we just wish everybody would kind of the tide would rise all boats, not just one
It
or
kind of
two.
is, right? I mean, it kind of
It's starting
it's
to.
it kind of is. Yeah, I mean, you have some other areas. Even when you look at a sector like healthcare, that's shown the most relative strength deterioration since
Mhm.
the election. There's the drugs sector portfolio that we have on the site is like the best sector PA portfolio that we have. I mean, so there's still areas within sectors that are underperforming that are showing improvement. But dispersion is a good thing, right? For our stuff, we want to see
Mhm.
that kind of dispersion as well as we look toward next year. It'll be an interesting area to kind of continue to monitor, see how if this tech deterioration, semiconductors obviously led a lot of the ascent. It naturally makes some sense when you think about the semiconductor play, though, for that outperformance to translate over into some of the companies that are actually using the chips, like your software stocks. And when you
Mhm.
look at software, so like semiconductors over the past, I think it was 3 months was what Miles was looking at yesterday in the piece. You have semiconductors up about 9% and software is up about 27%. Right. And so it's like you're seeing some of that outperformance from semiconductors translate over into the names that are actually using the chips, using AI, which kind of makes sense when you think about it from a more a logical perspective, right? So we'll see how that kind of translates over. Even if Nvidia is not up another 200% in 2025, the market could be okay.
Right. Yeah. We might be okay.
Yeah, yeah. Yeah, I mean, we could keep talking hypotheticals here probably for the rest of the day, but was there any other charts or anything you wanted? We're not going to hit on. Bitcoin did hit 100,000.
Hmm.
The chart of Bitcoin, we look at closing prices for that, so it hasn't updated there. But by the time you all are listening to this on Friday the 5th, we're recording this on the 4th. It just we do know Bitcoin did hit 100,000. So sorry for not having a whole podcast about that.
Yeah, we also figured at this point most people would have already read somewhere that Bitcoin hit
I mean, as soon as it
100,000.
broke 80, broke 90, it was you knew it was going to hit 100,000. Yeah, it's
Yeah, it felt a little bit inevitable.
we'll see. Well, maybe we'll do a whole once it hits 200K, we'll do a whole podcast on
There we go.
it. Cool. Well, David, thanks for hopping on this week,
Glad to join as always.
and thanks to everyone for tuning in this week. We'll be back to touch base with you all next week.